Hey, Joe Mastriano, CPA, over 40 years and thousands of successful IRS cases. And I will be continuing now, at least through this month, to warn people like crazy to manage properly their situation with the IRS and not to take their tax return and their IRS matter for granted, as a lot of people do each year. I'm going to be doing another video after this about falling for the gimmicks of national tax companies putting out advertisements telling you that their specialists will be available to do the return for you. So this year you don't have to do your tax return. What nonsense. Anyway, um, so what happens is a lot of people, a lot of preparers, a lot of accountants, and you personally might do this too. You get a letter from the IRS and you say, "Oh, let me read it carefully and let me try to resolve it." But you don't know where they're coming from. You don't know what rights and rules apply to your situation. You should never blindly respond to an IRS letter unless you've pulled your transcripts. You know what returns are logged in. You know if they show you owe money. You always have to take, and I've done this for decades, an overall approach to understanding your situation first before you respond. Now, the traps people fall into it. For last few years, Intuit has been working closely with the IRS. They got busted for a scam that they had. Some of you might remember. You go online, you go to do your free tax return, and you spend all this time to put your information in, and then you find out you need a simple form like a Schedule A or something that might have been an obvious form that you would need, and all of a sudden they hit you up for money. If you don't pay them, they don't even let you download what you did and saved it. You lose all the time and information that you put in. If you search that on the internet, you'll see that that was an issue before, and they continue to do so. Between the media and these big software companies and the IRS, they do not have the taxpayer's best interest at heart. There'll always be experienced people like me who have done a lot of cases, maybe not thousands like I have, but that have done a lot of cases and have gotten to understand how the IRS operates. So I'm going to buck the trend now, as I have been doing for many years, and tell you that if you e-file a return, you can attach statements. And what does that mean to you? Well, if you got a Schedule C or you've got different types of transactions that go on the return that require explanations, or certain attachments you want to include with the return to establish your position, you can't do that when you e-file. So you're at a disadvantage. We do paper returns for that reason. And I've seen some videos recently by people saying, "Oh, they're just blindly following what the IRS puts out, telling you don't do paper returns because there's all these returns that haven't been processed." Nonsense. It's the returns that were filed during 2020 and 2021 that are jammed up in that giant pile of unfiled returns. I filed my 2021 1040 personal tax return a few days before the extension deadline, because that's when the wage and income transcripts are settled, and that's when they've picked over 90% of returns for audit. And within 6 weeks, they processed my paper return and put my big refund into my bank account. So I also have clients too that within the last few months sent in returns and they got processed. So it's nonsense to say that you should e-file because they're not going to process your paper returns. And you shouldn't be in such a big hurry anyway. And that brings me to the wage and income transcript. why would you ever want to go to some preparer and say, here's my W-2 at 1099 and here's some expenses I had, and ask me some questions and hope and keep your fingers crossed that they know what they're doing and it matches what the IRS has. What you do is you file an extension sometime during the summer. Any third party payer information will probably be changed and adjusted by then. And that includes broker statements. I've had 1099Bs changed in April or May. A few years ago in May, after people would have filed the returns, if they were rushing to file by April 15th. So what you've got to do is people make changes. Brokers make changes even after April 15th. And I can go on with several stories of people I know who have made changes to W-2s and other documents, K-1s. Our firm also, we've come into additional information, so we have to amend it and file an accurate partnership or sub S corporate tax return that has a K-1 distribution of that income and expense to the taxpayer. And if that changes, then you have to amend the 1040 tax return. And so you really need to wait until a few days before the end of the extension so the transcripts can settle. And the other thing is filing a paper return because of what I mentioned earlier. Um, what else do I have on my list here? Um, you also want to put explanations, which I mentioned earlier. You know, a lot of people use vehicles or office and home, and you got to be very careful about these people. I bumped into several of them on LinkedIn that brag that they can lower your taxes. H&R Block tried to do that a few years ago on their commercials and got in trouble. You don't want to lower your taxes as much as possible. You want to take the deductions that the IRS allows and that they will not attack you on. I've looked at so many returns in my career that I knew were audits waiting to happen. And sure enough, a good bunch of those were audited. And when people, I play this little game, people that have been audited and they want me to represent them in the audit, they bring their returns in. And within 5 minutes, I look at it and I say, I bet they're auditing you for this issue here. And they're like, yeah, how do you know? And I know from the face of the return that it's some big number that doesn't make sense in relation to all the other items on the return. And of course, they e-filed, so there's no explanation why their auto expenses or, half of the gross income or some other expenses, travel, entertainment, things like that. Because a lot of tax preparers want to get clients by bragging that they can get you the biggest refund. And what they do is they just blindly follow guides and they say, oh, look, this is deductible. See what the guide says? They have no understanding of IRS auditors and what you need to protect yourself for those particular deductions. And again, I can go on and on. Whatever you do, if you file your own return, we review returns. I could help you get the lowest tax on your return if you do the return, and I just alert you to areas that you need to take a second look at. Anyone that discusses the numbers with you and tells you what to put down, if they're significant, must sign the return. But if you don't get involved in that particular level, you don't have to sign the return. Circular 230 for tax preparers is quite clear on those rules. They're not much of a controversy in that area. I'm trying to think of what else to say. Um, whoever you go to, or if you do it yourself, um, they really, really, I can't emphasize it enough, has to have some level of experience of challenging items and to know enough to tell you for those particular expenses, not only how to put them on the return with explanations and how to audit proof and file an extension and explain to you that the tax return deadlines have nothing to do with the payments of the tax deadlines that a lot of people correctly think. Um, but you really need to go to somebody who understands how the IRS looks at the return for your best protection. We do audit representations for several tax preparation companies that just kick out those returns, and they keep their fingers crossed that not more than a handful of people get audited. But what happens is if you go to a preparer, and I've seen this during my career too, um, they'll go after several people whose returns were done by that preparer. So perhaps your return might not be that bad, but your preparer gets busted and gets preparer penalties, and then they decide to check the returns that they did, and they'll pick up your return for audit that way. I'm going to end this now and get on to my other video, which I'll post right after this. Call Stephanie 713-774-4467 or email Stephanie at taxproblem.org. That's taxproblem.org. She'll talk to you for free and help you decide what to do. Mostly we try to get consultations with me so I can explain things in general to you, and very specifically so you're not afraid of the IRS and don't live in fear of being audited, and don't live in fear they're going to take your stuff or levy your bank account or your spouse's account or your kid's account. I'm telling you, they've gone hogwire now. A lot of people don't see it right away because automated collections is still not taking collection action, and then they have 3 collection agencies and they're not allowed to levy. So the number of people in the total population has gone down in terms of who they're levying. But revenue officers who are assigned your case, they're going to take liberties just like these auditors do. So see you next time.